Hi everyone, welcome. We are going to discuss about the source of finance, some revision questions we are going to do right now. Exam practice question from the Napier Hospitality. Right. First of all, to read the case study, Kiara, can you read the case study? This case study is based on the New Zealand business. Their sports actually fixtures and everything they are maintaining, and then you can buy ticket from them. It's a small business started in the garage, and then he expanded the business. There are some new good things are there. A lot of finance, also finances are here. Discussing this case study, right? So mainly this case study was really it's a good inspirational case study. That's why I have taken this case study, because when you're reading this case study, you can find out more information regarding the how people work hard, and how they make choices, and what are the reasons behind those choices. Everything we can find out by looking at this case study, right? Okay, first of all, then Kiara, can you read this part?
Yeah, sir. Napier Hospitality organizes corporate hospitality in all the major cities on the North Island of New Zealand. They organize trips, visits, and events for companies that want to entertain clients. Examples are taking guests to high-profile sporting events such as race meetings, and in the last 5 years, a lot of business has GMs, particularly for international matches. The market is growing very strongly, and Jennifer Prince, the owner of the business, has always been able to get plenty of custom. The business has started in a warehouse office in Napier. However, the business has reached a new stage in its development. There is now a need to relocate to a high quality space in order to project a more upmarket image. There are other investment needs. In total, the business requires 400,000 New Zealand dollars to relocate a new office, redesign and upgrade the website, set up a ticketing agency to buy and sell tickets for sporting events. Jennifer is planning to use external funding for the business. Internal funding is not really an option because there are no assets to sell, and Jenny has spent most of her profit on developing her home. Figure 1 shows the profit and retained profit for the business between 2011 and 2017. After a meeting with her accountant, the following funding options have been identified: a mortgage using Jennifer's own house as security, an unsecured bank loan, set up a private limited company and sell shares to members of the family, and attract a business angel to invest in the company.
Okay, next para.
The method of funding preferred by Jennifer is the unsecured bank loan. She does not really want to risk any personal wealth by using her house as security for a mortgage. Also, although her father could easily provide much of the finance in a share issue, she's worried that he might try to interfere too much. She thinks the involvement of a business angel might be okay, but wonders whether the right sort of investor could be found.
Okay, thank you very much. So in this case study, you can find out how she worked hard. Jennifer, our the case study, the lead of this case study is Jennifer, and she's in New Zealand. And then she organized what's her business? She organized trips, visits, and events for companies that want to entertain clients. Like they have some certain needs like that. For example, you want to taking their guest like high profile sporting events such as race meetings, international cricket, international football, international rugby matches. New Zealand is a famous for very rugby, All Blacks rugby, right? And then so this is the one they actually doing this kind of facilities, providing, like making like bookings and everything on like in advance, and then especially they are giving high profile clients this service right now. And then she needs some money for this case study, so she expects some money to develop for this business, because she has right now she's working in a warehouse office in Napier, because that's not a good location though, because if some client, corporate client, high profile person comes and visit for a place, you must have some decent location. Therefore she decided to relocate her business into a new office, and also redesign and upgrade the website, and set up a ticketing agency to buy and sell tickets for the sporting events. So you can see that now, according to this figure 1, the profit and retained profit of the business between 2011 and 17 This pink color indicates the annual profit of the business. From first year it was loss, and then slowly you can see she pick up the profit. Annual profit has increased. It's a very good trend right now. And the retained profits also, her own savings, very small, you can see less than 10,000 every year, but 5,000 further. She all this is profit. She actually retaining some small amount of profit as savings, right? So now by looking at these opportunities, 400,000 is a big amount for her, and she's looking at 4 opportunities after meeting with her accountant. The accountant of the business gives some kind of 4 ideas. First one, to mortgage Jennifer's own house as a security. This is another way, like you can source your own money, like you can, if you have property, you can mortgage it and you can find the money. And second one is using unsecured bank loan. Unsecured bank loan is a second option. That is without giving any collateral, right? The unsecured means like taking a loan without providing a collateral. It's like a personal loan based on income, right? The third option is set up a private limited company and sell shares to the members of the family. So now she's doing business alone as a sole trader. So third option is she can convert the business into private limited company, and she can sell shares to a family member like father, mother, grandfather, grandmother, aunt, uncle, like that. So family business, she can make a business like a family business and attract business angels. Fourth one option, to attract business angel to invest in the business. I think if you watch the business angel mean concept, like the organizations who are like to invest in the startup stage of the business or early development stage of the business organization. That's called business angels. If you watch the like a Shark Tank, Dragon's Den, like that, this kind of reality shows, it's a very good idea. You can get some what is a business angel. So these are the things. But however, the next para she's mentioning the evaluation point, the some options she liked, some options she didn't like. In this case, he mentioned the method of funding preferred by Jennifer is the unsecured bank loan. She liked the unsecured bank loan here, and she does not really want to risk any personal wealth. That's the idea, because she don't want to risk. If you first option, she has to mortgage her own house. So in business lose, she is losing her house also. Therefore, she don't want to take an extra risk. That's why she liked unsecured bank loan option. And although her father could easily provide much of finance for share the issue, for example, if you go to share issuance, her father can be invested in her business. But the problem here, she's worried that he might try to interfere too much. That's the thing. She don't want to actually get the influence of any family member. She want to do the business alone, like independently. She want to move. That she admire more independence. That's why even though a father is very very possible in this case, the father's influence. But the problem here, Jennifer doesn't like that father's interference to the business organization, because she wanted to carry the business, run the business as she wants. So that's another thing, that she reluctant to go ahead with the private limited company formation, because she don't want to get the influence of other shareholders, like especially her father. She thinks the involvement of a business angels might be okay, right? Angel investment is okay, but she wonder whether the right sort of investor could be found. That's a challenge, because there are so many investors are there. Some people are very easy to work with them, very compatible, and some people are not like that. Some investors are very very sometimes very difficult to work with. Therefore, she's actually looking towards, she's okay with the fourth one, but she's having some problem with to find the right person, right investor to help her out. So these are the 4 options, and like the 4 questions they're asking. Define an unsecured bank loan. Define an unsecured bank loan. This case, when you're defining unsecured bank loan, what you can say? The unsecured bank loan, you can see the bank loan obtained by a banker without providing any collateral or security. That's why unsecured bank loan. So secured bank loans mean like mortgage loans. Unsecured bank loans means like a personal loans or something. Okay, so let's go back to the marking scheme and see what is the definition properly for this case study. So can the definition, if banks lend money without the borrower providing any collateral as protection, the loan is considered to be unsecured. Unsecured bank loans are risky for banks, because if the borrower defaults, the bank may not get any more money back from the borrower. So that's the main definition of the unsecured bank loan, right? And look at the second question. The second question they're asking, explain one disadvantage to Napier Hospitality of issuing share capital. So this case, normally this this question actually, that's why this question should be changed. Explain question, normally we are checking AO1, no application. But this case study, you can see in the answer, they apply to the case study and asking disadvantage Napier Hospital. So I would like to change the command word as outline one disadvantage to Napier Hospitality of issuing share capital. This case, actually, there are two reasons are given. So actually, disregard this as a separate point, and this is separate point because two paragraph are no need. This question in IGCSE we can convert into 2-mark question if we convert this outline question. Outline one drawback, outline one disadvantage of Napier Hospitality issuing share. Outline question, 1 mark for the point, 1 mark for writing disadvantage, 1 mark for the application attaching to the application, right? So I'd invite Amma, can you read the answer? Part B.
One disadvantage of issuing share capital is that all shareholders are entitled to a share of the profit. For Napier Hospitality, this means that all the future profit generated by the business will have to be shared with shareholders, including Jennifer's father. Jennifer may resent this because she was the one who started the business in the first place. She might argue that she has done all the hard work of setting up the business and surviving the uncertain years. Another possible disadvantage is that the new shareholders will be part owners of the business. This means that they are entitled to have a say in the way the business is run. They can be involved in key decisions because they will control part of the company. For example, it states in the case study that Jennifer is a little worried that her father, who can afford to invest in the business, might interfere too much. This might result in conflict between family members.
Okay, thank you. Very good. So, there are two disadvantages actually specifically mentioned. First disadvantage is issue share capital is the all shareholders are entitled to share the profit. That is obviously if you issue shares, the profit also has to be shared among the shareholders. And as a result, what happens to now application, look at here, the Napier Hospitality here, this means that the all future profit generated by the business will have to be shared with shareholders, right? All the future profit generated by the business will have to be shared among the shareholders, including the Jennifer's father. Jennifer may resent this because she was the one who started the business in the first place, and she might argue that she has done all the hard work of setting up the business and surviving the first uncertainties. First thing. So there is a if business become a success, there are so many people like to join with you because no one want to actually be with your, like, this a person unsuccessful, or like for example ship, normal imagine ship going down. So a lot of people, whatever, they want to jump out of the ship. But when the ship is sailing properly, so with a successful business organization, everyone wants to be a part of the business. But if business is not doing greatly, so a lot of people are leaving the organization because no one wants to actually get some kind of a risk of business failing. So this case, that's why if your other shareholders involved in the business, so they have to she has to share some kind of profit like a dividend with them. So that's another problem. Okay, second problem by issuing shares is the possible disadvantage that the new shareholder will be a part owners of the business, and they entitled to say in the business run, that decision making process they are involving. So where Jennifer is actually reluctant to do it because she admires the freedom. Especially in this case, the key decisions will control the part of the company. For example, it stays the case study. That's how you can write the application. You can use this word. It stays in the case study, like that. In this case, it stays in the case study like that. Please use this word in your answering in examination. When you want to say specifically from the content, you can use this wording, right? It stays in the case study that Jennifer is a little worried that her father, who can afford to invest in the business, and might interfere too much. This might result in conflict between family members, right? Conflict between family members, right? So this is the way that normally when you're writing a question, this is actually, I changed the command word to explain to outline, because explain question, usually we are not writing any application forms. I convert this question as an outline question, which carries 2 marks, right? So this kind of one paragraph is enough for that, right? Okay. Right. Part C. Explain one possible reason why Jennifer preferred external funding in this case. this case also I want to like normally I convert this question as outline question. Outline one reason why Jennifer preferred external funding in this case, because all these four methods are, I can see external funding. Mortgage is external funding, right? Unsecured bank loan is external funding. Private limited company share issue is a external funding. Business angel is external funding. They're asking why she would like, right? She preferred external funding in this case. Because one reason you can see she didn't have enough internal sources. That's why if you don't have internal sources, you have to, anyway, there's no option. You have to depend on the external sources, right? Let's see what are the mentioned, what the answers in the mark schemes, right? So you can see here, part C, explain one possible reason why Jennifer preferred Excel funding in this case, 4 marks. So this question, because of the application also there, I would like to convert this question as a 2-mark question, outline question, right? Yes, Saranya, can you read the answer, please? Part C.
One possible reason why Jennifer preferred external funding may be because internal funding would have been difficult. There are no assets to sell, and Jennifer has spent most of her profit on developing her home in Woodstock. Figure 1 shows that the profit in the business has grown steadily over the 7 years, but most of the profit has been taken out of the business. Only a fraction, around 10% in the profitable years, has been retained over the period. How much of the money is left in the business cannot be determined without reference to other documents, such as the balance sheet. Internal funding options appear limited. The case study does not mention whether Jennifer has any personal savings, but the chances are that most of her money has been invested in her house.
Okay, thank you. So you can see, yes, the main reason is that she prefer external funding because internal funding would have been difficult, right? So there is no assets and sell, and Jennifer has spent most of the profit in developing her home in Woodstock, right? Figure 1 shows, I'll go back to the case study. You can see here in the figure 1. Sometimes you might be wonder why she's earning this much of profit, why she returning very small amount, but about 10% of the like a small fraction, right? You might be wonder about that, why she's earning that much of such a big profit margin. Annual profit is this much, but return profit is very small amount. Why? That's actually most of the like a exciting question right now, because why she's earning such a huge profit, but look at the return earnings. To what is she spending on? She's spending a lot of profit for what? She's developing a house, own house in Woodstock. It's mentioned in the case study. The money she actually gathering from the business, she actually developed the business and everything. She used that money to actually develop her house, right? That's the main reason. She actually used that money because she's a sole trader and a young girl, right? So actually this profit actually the business she used for her own purpose, especially for development of the own house in Woodstock, everything. But here, that's why it's actually not a good reason, because you are earning something from the business, you must save that money for the business purpose. But this case, the money she generated from the business used for her personal purposes. Now she's looking for external sources. That's why I think something that the problem happened with her financial management over the basic, like 2011-12, we can see that's just a startup stage. But 13, 14, 15, 16, 5 years, she has earned great profit. Great number of profit, but the profit margin, you can see saving, you can see return of which are very low, right? Because she spent her money for everything without saving for on things. That's why sometimes we can't say actually how much she has personal savings, because we can't access the balance sheet of the business, SOFP. That's why if you have SOFP, we can find out how much assets she has, whether she has enough assets to mortgage, how much capital she has, how much liability she has, everything we can get some idea by looking at. But here we have only this chart. By looking at this chart, that's why you see the mention in the example market scheme. The profit of the business has grown steadily over the 7 years, but most of the profit has been taken out of the business, and only fraction, about around 10% profitable, profitable years has been retained over the period. That's the thing. That's the main reason for the running out of cash. That's why if you're doing a business, please make sure you have to save a lot. Savings is the important thing, any organization, because you can use the savings in the long run for the expansion purposes. Then you don't need to worry about the bank loans, because anytime you have the money with you. How much the money is left in the business cannot be determined without the reference to other documents, such as the balance sheet. Right? The internal funding options appear limited, and the case study does not mention whether Jennifer has any personal savings but the chances that the most of the money has been invested in her house. Right. Okay. Like now we are going to the last question, the 10 marker here, but I would like to convert it to a 12 marker as evaluate question. Evaluate which method of finance Napier Hospitality is like to use in this case. So when you're writing this question, you have four options. Four options are there. When you're writing this question, you can actually normally in evaluation questions in IGCC, we are taking, for example, evaluate whether primary research would be important like that. So one concept, 10 mark, 12 markers mean, you have to define the concept and you have to write two positives of the concept and the two limitations or two arguments against the arguments for and arguments against, two positives, two negatives, and a conclusion. When you're writing this case, you have four options to write. You can select mortgage, tell one good then one bad, and then unsecured bank loan, and attract business angel like that. You have to think about only just there are four opportunities are there. Or otherwise, you can talk about mainly external source of finance. You can take without mentioning this is an example of external source of finance. You can take the concept, this question we can redefine, evaluate external source of finance, which external source of finance the Napier Hospitality is likely to use. So evaluate which method of external source of finance. Like now, external source of finance, we talk about this. So define external source of funding. Give the two advantage of external source of funding. Then therefore, generally, you can talk about the advantage from these four. And then you do disadvantage of external source of funding. Right, you have to pay the huge amount of interest, right? You have to pay the shares and everything, you have to pay the dividends. Control has to be given for the business organization and give the conclusion, right? That's a normal 12 marker structure. I convert this 10 marker to 12 marker. Write the definition, write two positives, write two negatives, and the conclusion, right? So this one, okay, I would see the marking scheme answer and we'll see what are the points that we can make sure to get right. Okay, I would like to invite TJ. Can you read this part? Part D.
Although Jennifer would prefer an unsecured bank loan, she is unlikely to get one for 400,000
New Zealand dollar.
New Zealand dollar. Even though the business is profitable, it could be argued that a bank would be reluctant to lend Napier Hospitality 400,000 New Zealand dollar without any security. In recent years, banks have become very cautious about lending to small businesses because of the recession and the increased risk of lending to business. The bank might also need more information, such as a thorough business plan supported with cash flow forecasts and details of how sales are going to be generated. If Jennifer really wanted a bank loan, she would have to consider a mortgage. A bank would be much happier granting a secure loan where they have some protection. Jennifer might have to consider this option seriously unless she is genuinely prepared to share ownership, either with her family or a business angel. Raising money by extending the ownership of the business is often difficult for entrepreneurs, but there are advantages. If Jennifer were to find a suitable business angel, she would get the
Yeah, so you could get the that's a business angel, correct me. So yeah,
money without having to pay interest. This would raise the profitability of the business. A business angel might also have some good ideas to pass on and help the business develop. Also, most business angels want to invest and then cash in their investment about 5 years later. However, finding a suitable business angel might be difficult and time-consuming. It will also cause problems if the business angel starts to try to exert too much control. Setting up a private limited company might be the way forward. Fresh capital will be raised and the payment of interest is again avoided. However, the new shareholders would be entitled to a share of the profit for as long as the company is trading, unless Jennifer can buy back the shares at a later date. There's also the fear that her father might interfere too much. Not only might this disrupt the running of the business, but it could also lead to a breakdown in Jennifer's relationship with her father. To conclude, I think Jennifer might have to decide between a mortgage and a business angel. It is unlikely that a bank would grant an unsecured loan, and there's a risk of damaging family relationships. If Jennifer is lucky and can find a suitable business angel, this might be the best way to raise the finance. However, if this ends up being too difficult, the mortgage would be the best option.
Yeah, so they are giving the very nice conclusion also, right? You can see this entire answer is talk about all 4 options, right? If you go to the answer again, you can see they mention, although Jennifer would prefer the unsecured bank loan, she is unlikely to get one for New Zealand dollar 400,000 because there's a big amount. Even though business is profitable, she could argue that the bank would be reluctant to lend Napier Hospitality about 400,000 without security. It's very obvious, right? And also then give, that's about the first one, giving about secured bank or unsecured bank loan thing. And Jennifer, if really wanted to bank loan, she would have to consider mortgage. Bank would be much happier of granting secured loan, where they can, some protection is there always, right? Normally, if you ask for a mortgage loan, bank would like to give because they know risk is very low. Jennifer might have to consider this option seriously unless she's genuinely prepared to share the ownership, either with her family or a business angel. And raising money by extending the ownership of the business is difficult for entrepreneurs, but there are advantages. Like with the suitable business angel, she can actually take the money without having to pay interest. That's the other thing. As a result of that, a business angel might be able to have some good ideas to pass on. We talk about mainly business angels, not only giving money, they are coming for the management of the business, and they are giving good ideas. Their business contacts, their knowledge they are using for the benefit of the business investment and pass them to help the business development. Also, most business angels want to invest in the then cashing their investment about 5 years or later. That's their project. They are giving their investment. After 5 years, they are taking back their cash with the profit. However, finding a suitable angel might be difficult. That's a business angel track, right? And third one, when you convert it to private limited company, right, then you can get more fresh capital, and the raise and payment of interest will be avoided. However, the new shareholders would be entitled to share the profit for as long as the company is trading, unless Jennifer can buy back the shares at the later date. That's why it's a permanent source of capital. And there is also that a fear that her father might influence or interfere too much. Not only might this disrupt the running of the business, but it could also lead to a breakdown of Jennifer's with the relationship with the father also. That's the thing. If you know only family members, sometimes that's a problem. And also look at the conclusion. So I like the conclusion of this answer. You can see to conclude, I think Jennifer might have to decide between mortgage and the business angel. The 2 options, mortgage or business angel. This is the one she actually thinking about, unsecured bank loan and angel, but she's giving idea, okay, I should go ahead with the mortgage and the angel. It is unlikely the bank loan would grant unsecured bank loan, and there's a risk of damage in the family relationship with the other share issuance. If Jennifer is lucky and can find a suitable business angel, this might be the best way to raise the finance, giving. However, this ends up being too difficult, and mortgage would be the best option. For the time being, mortgage would be the best option. Like that's how you have to mainly recommendation everything you have to do with this, right? So mainly when a 12 marker, when you're discussing the 12 marker, I would like to go for one more 12 marker question. This is a recent paper. I'm taking the 2021 June paper, question number 4, part C. You can see you can find out the question here, the 2021 June paper, evaluation question. This case asking, this is normally not the financial management, they're asking evaluate the factors that NOF might consider when measuring the success of the farm shop. This is a farm shop, actually organic farm, and then they wanted to measure the success, right? This is judging success lesson. The evaluation question came from first time. You can see customer satisfaction and the judging, normally like a success of the business organization. What are the evaluate the factors that NOF might consider when measuring the success of a farm shop? If you use the information provided as well as your own knowledge of the business, right? Okay, first of all, we'll go to read the case study and we'll get some idea about the case study, what is this organic farm and everything. Okay, this is a case study. Okay, I invite Rahma, can you read the case study, please? Oh, Anusha, can you read the case study, please? Anusha.
Nantuofane Organic Farm (NOF) is a farm growing a range of fruit and vegetables. It has a farm shop and offers accommodation with breakfast. It was set up by Amanda and Ken Edwards in West Wales, UK. NOF supports farmers by selling organic produce in its farm shop. Produce from the farm shop is served to the visitors staying overnight at the farm. NOF is committed to being environmentally friendly by recycling, avoiding the use of packaging, and reducing the use of electricity. Which one of the following is an external source of finance? A. Personal savings, or B. Retained profits?
Yeah. Okay, Raj. Mainly this question asking, mainly I want to make sure that got this one, the MC, so okay, MCQ question also came from the external finance. But which of the external source of finance? Definitely it's a bank loan, right? Personal saving, return profit, selling assets are internal. This is a bank. Okay. Now this question I want to consider this farm shop actually. This is actually they are providing organic farming. Not all that, Ken and Amanda. So Ken Edwards and Amanda are the main owners of the business organization, and they are producing organic farm shop and produce the farm shop and serve the visitors staying overnight at the farm. They're providing accommodation also, and bread and breakfast also for this organization. They provided the services. So 12 mark I'm asking the case study here. This is a case study. 12 mark question. They're asking evaluate the factor that NOF might consider when measuring the success of the farm shop, right? So evaluate the measures of judging success. Okay, in question, this is the what are the success measures? You can see customer satisfaction, awards and rewards, everything. Okay, in the mark schemes is mentioned. You can see 12 mark question. We are normally, right, we are taking the all four assessment objectives, AO1, AO2, AO3 and AO4, 3 mark for everything. AO1 is knowledge section. So knowledge section, we have to define what is meant by the a success measure, or you can see the profit produced by the farm shop and the growth of its product range. These are the main measures of success: the profit that the farm shop earn and the growth of the product range. In application points, we can mention that the NOF will be able to see how much profit the farm shop is making compared to overnight accommodation, right? By comparing how much profit is made in the farm shop, the NOF can spend money improving the areas that needed developing, right? They can compare this profit. The farm shop would be able to spend money improving the areas that they need to develop, right? And look at the other thing. NOF is looking to expand its product range, right? Because product range is another thing after judging success. NOF is looking at it expand its product range, which shows it's currently successful in the product is already sells. This shows the success of the business, that there is a demand for the product produced and it is willing to take a risk by expanding that range. Look at the evaluation point, however points, even though we are evaluating the product range and the profitability. However, an increased profit is depend upon many other factors. Look at the way they evaluate the point. This is called the evaluation point. Evaluation means you are writing the limitation argument for that thing. Profit is good, but profit depends on what? Depends on many factors outside control of the business in NOF, such as the weather, which is farm business, whether this could be impact heavily on much of the farm is producing, or how many people want to come and visit the farm shop, like that. And also another point you can say the growth rate. But however, there is no guarantee that this growth will be a success at the time when supermarkets sell the same products cheaper than the NOF and other farms can afford to do. So even though the growth rate is okay, but this will be depending on how this will be. However, there is no guarantee that the growth will be continuing or growth will be success at a time when the supermarkets also entering and they sell the same organic products at a cheaper rate than the NOF. Then that's a problem coming. So you have to think about not only the case study, think about your knowledge. What happened when the profit is okay? Right now they are earning good profit. What profit is depending on what? Weather, because there's a bad weather coming. Too much rain, like flooded, or no rain at all, like a drought. So at the situation, what happened? No profit. No profit. So profit will depending on so many external factors, still those factors. And another key important point is the growth rate of the business. Yes, product growth rate also okay, but it's depending on what? The continuous momentum will be depending on the how competitors' actions. If other competitors and supermarkets also giving the organic food, what happened? Then no business, no growth rate. Always evaluation means write some kind of challenges and conclusion. You can write down how to overcome these things, solution for this thing, like that. This is how write a 12-mark question in a, this is I'm taken from the latest paper 2021 June paper 1 small business, right? So and also you can see other questions also in a 6-mark question. They're asking analyze the benefits of using personal savings to expand the product range. This is the source of finance question. Internal source of finance, I would like, okay, we'll discuss this also. Analyze the benefits for using personal savings to expand its product range. If you use a personal savings, mainly you can no need to pay interest. Personal savings are very flexible. Anytime you can use, no documentations. Personal savings are quite comfortable, right? And how to write this one with the application, proper application. Okay, let's go to the answer. The mark scheme. So 6-mark questions. Normally we are taking AO2 and AO3. Right. This is the thing, like if you write a level 1 means like a 1 to 2 marks. Level 1 answer with limited application and limited answer. Level 2 answer means like maximum 4 marks you can carry. Level 2 mark is a sound application, but the analysis point is minimum. Logical reasoning, deconstruct the business information is very not that much good average answer. Level 3 answer is the excellent answer. Level 3 you can get maximum 6 out of 6, minimum 5 out of 6. So this means you have detailed application and detailed analysis points. So we'll see what are the points that you can write with the BLT points method material. Okay, right, this one I invite TJ. Can you read the answer?
NOF can start making ice cream immediately as they have the money. Amanda and Ken will not have to pay any money back to their bank. By using personal savings, NOF does not have to go through a lengthy process of taking out a loan, as there is no loan. There is no need to be concerned about monthly repayments, interest, and any profit gain can be used to put back into the business.
Okay, so we are linked like that. First AO2 with the first AO3 one. That's right. First point with the first point, second point with the second point. That is, if you write the AO2 like first point, it is actually they wanted to have personal savings, start some ice cream, making ice cream immediate. So an advantage of using personal money, you can start it immediately. And how to evaluate it, analyze it by using personal savings. They have to go through a lengthy process of taking out a loan. If you go to a bank loan asking a loan, you can't actually first day you can't actually take the loan. They're asking certain documentation, so many papers, so many forms to fill. Yeah? After lengthy process of formation, filling the forms and everything, then only they will grant you a loan. Like it will take some days in like a developing countries like like Sri Lanka and all Asian countries. It will take like about 1 week, 2 weeks, right? But in even developed country also, it will take like maximum 2 days, right? So there are 1-day services also there, but there are so many documents to fill, and they grant your the loan, everything based on that out. So the second point, Amanda and Ken will not have to pay any money back their bank. No need to pay back. It's a personal savings. It's their own money, so no need to pay back to anyone. So look at the second analysis point of that. As there and there is no loan, there is no need to be concerned about the monthly payments, monthly repayments, and interest, and any profit gain can be used to put back into the business. Like that. So this is how we have to write. Like I know there are a lot of students who can write better answers than this. Is like just only just an indication, just a reference only. We can see when you're writing an answer, 2 advantages, you have to write like this way. Immediate is very fast method, and no need to pay back again. These are the 2 points, and that's how they develop like this. All right, so today we discuss about the main questions. I'm mainly taken this today's lesson as to actually mainly go through this case study. We talk about external source of financing case study from the Napier Hospitality business. And also I taken the 2 questions from the 6-mark and 12-mark question from the 2021 June paper small business also. So I think you can actually, you understood the lesson. So this is a way of exam practice questions are coming in the examination, right? From that, I'm going to wind up today's session. See you in my next session, guys.